Good afternoon, Maverick traders. Closing out January on a very interesting, I would say, volatile move, but overall up. And it's a tough one to identify because of this volatility. What do I mean? Well, I'm going to tell you what I mean. I got my 2 cents. Take responsibility for the outcome. Let's jump right into it with some market analysis. Overall, we've experienced a pretty strong January. Where we go from there really just depends on what these markets want to do with it. Now, across the board, guys, let's see how we finish. The Dow, the S&P, and the NASDAQ all lower. Dow's down about 0.75%, S&P 1.29%, and the NASDAQ just shy of 2%. Russell's 1 1/3. Oil down quite a bit, 2.37. Gold has still just kind of hung in there. It just is floating higher. It's just creeping up there. So we'll see where that goes. Overall, the markets appear to be pulling back from resistance levels. That's kind of what I'm seeing. This is just a very volatile way of doing it over the last week or so. Volatility remains high, and what I mean by that, guys, is gapping up and running higher, or gapping down and running up and gapping down. But the volatility index itself, the VIX, remains low. The fear index remains low. So all that's left, if there's no fear in the markets, is speculation. So we definitely have a lot more optimism or complacent trading going on than we have Fed and economic worries. That's all I can gauge off that. Okay, let's get to the advanced decline line and the below the 50-day moving average, 75% above, 25% below. And I truly chalk that up to this move we've had straight up, pretty much straight up since the beginning of the year. Advanced decline line, see at 74.23, because when the markets do pull back, everything participates, and that's the volatility I'm talking about. So 75% or 74% down, 23% up. Let's jump straight into the chart because I saw a couple. In fact, the SPY chart is actually a trade that I have for today. We'll get into it in a second. This is the move that I'm talking about. This is the beginning of the year, and that's just straight up. Now, what's tough is taking in using as an example, I should say, this week. And maybe it has a lot to do because it is earnings. But let's take a look at the week and a half. So we had a little bit of a pullback here, and then a good move to the upside. We had a gap higher and then a move higher. Gap down, goes nowhere. A gap way down that retraced and went back up to this 400 level. Then we have a gap up with a shadow, a gap down with a higher shadow, and look what do we have today? A gap down that means to pull back to that 400. Just this week and a half, let's call it a week and a half, and this volume has slowly been going down, but it's pretty high. I'm going to put a lot of that on individual reactions to some earnings and some bottom fishing and still some complacency out there with people throwing darts saying, look, I'm not afraid of a crash. It's not going to happen. Anyways, I've got a bunch of protective puts. I'm going to buy some stuff. It's been super volatile, and that's kind of what I'm saying. However, if we focus on the overall market move, if you were sideways, if you're +1, +2 since the beginning of this year, you should be doing really, really good as long as you didn't over manage. A lot of my weakness is seeing these gaps up, gaps down, to reaction to news and worries and fears and acting on them, which best just to kind of shut off your ears and follow the price action. Here's the NASDAQ, or the Qs, I should say. Very similar. It's just using an overall resistance. It doesn't look like the optimistic chart of, let's say, the diamonds or the SPY, but it is definitely hitting a level, and it could consolidate right there. I don't see it falling too far, especially if we're going to continue to see a lot of buying off in some of these oversold, quote unquote, I should say, oversold tech companies or traders out there that believe they're oversold. But we do have the argument to pull all the way back to 280 and still technically be in a sideways to slightly bull trend. So this goes back to what Corey talks about, what we've been talking about, this ABC correction. Now, we do need to see it go a little bit higher for that to happen, but it doesn't mean it has to happen immediately. We do have a Fed announcement coming up here on Wednesday. We're going to see if that has any sort of push-pull, and we'll see who's going to win out. Is it going to be the fear of the Fed, or is it going to be the optimism of the markets? That's kind of what I'm seeing here. And so far, folks, barring today, it's the optimism of the markets and the overall trend. This is how we finished as far as the heat map goes. Everything kind of sold off. There is some green in there, and it could be specific to earnings, specific to news with it. But the overall pullback for today with the gap down moving lower was across the board. You guys saw those numbers that I showed you. That affected oil as well as the minis and everything. So where does that leave us? Not much. I'm going to take where we're at on the weekend with what Darren and Corey were talking about and going from a +2 on the monthly and a +1 on the weekly. I'm just going to move everything over. And it's easy to do because we are pulling back. And I have to go to 0 on the weekly outlook. I'll stick with that probably through Wednesday based on what the Fed does after that. But if we can hold these support levels, I'm definitely staying in a monthly outlook of +1, and I might go to +2 if we actually retest that 410 on the SPY and move higher. That's right, folks. I just got to trade these charts. And it's difficult with all this volatility, but the overall end of each day is the best way to do so. I've got some potential trades here. Here's some 2 to the upside, sideways, and down. I told you the SPY was a trade that we've been looking at with the midweek for a couple of weeks, and it's been holding in really good because the markets have been just doing what they're doing. So let's take a look at Ben. Here is a nice bull move, and what's fun about this is when we're talking about it, we have this resistance above 30. Okay, once it breaks above 30, this might be a good place to do it. Okay, well, it didn't look so good when we were talking about it in class. It had gapped down. But look what happened. It came all the way back down, closed flat on Thursday. Friday, it poked its head up. And sure enough, what happened this morning? It gapped down. This is what I'm talking about. And so what ends up happening is it pulls a lot of the short term out. So here's that gap down. This is where we closed on Friday. Gap down to the 30. Oh, geez, we're going to fall apart. Look at that volume. This could be earnings. I'm not sure. Folks, I apologize. Double check that. But we did turn around and finish higher. So this is a nice, tight, aggressive ascending triangle pattern that I still like moving forward if you guys are interested. The other one is Citi. Citi came from a couple of traders on Wednesday as well. And this thing seems to be pretty clockwork, I'll call it. I like how it just stayed above their moving averages, allowed them to cross at 50, shot up but stayed at this 52 level. It's Citi group, and it's a big one, so I imagine this might be something better sideways to diagonal, depending on when its earnings are. I apologize, I don't remember where they are, but double check them because this seems to be hanging in there pretty good, but I do like the overall pattern. Now moving to the sideways, this is Alcoa. Alcoa came to us as a sideways to bullish. Now, it's funny because since we have a down day, it's like, well, bullish is off the table. That's not true. Bullish is still on the table. It's just having this pullback to a 50-day. It might be a little bit reluctant here because of this rollover, but I did like the crossover. This last surge really spread these moving averages. So today, it's down quite a bit. However, we've seen these things gap down, run higher, gap up, pull back a little bit. If it's going to have one of those days, we just need to focus on that 50 support level. And this could be something sideways to up for sure. So let's see if we're going to play it sideways. 55 is resistance, 45 is support. If you want to play something in that area or something a little bit tighter, if you want to give it this glass half full, we'll see what happens on Wednesday. Maybe a diagonal spread, things of that nature. Here's the SPY. It's very similar to what we just talked about with Alcoa. And I'll talk about it again here. We got a little bit of a symmetrical triangle pattern on this, and it seems to be above it. But if this gap down continues down lower, I can see it revisit that 390 or at least the 50-day moving average. So a pullback, I believe the trader that brought this to us had a 390. Let me get rid of it. Let me redraw this. A 390, 400, 410 butterfly on it. Right there. And I tend to believe that that might work out really nice, especially if we slide lower tomorrow. I don't know if we slide, I don't know if we move too much going into a Fed announcement, but we'll see where we end up. But it is a good play to the consolidating sideways trade. Here's PepsiCo. PepsiCo is a nice bear. I do like how it just pretty much gave up all gains at the end and closed at this 170 mark. It's kind of pinned there. So you would expect this to fall lower, especially at the markets, but it didn't. It seemed like it was going to have an oversold bounce that just kind of fizzled out. So be patient with this, something sideways, something diagonal to the bear side. would be pretty cool on PEP. Let's jump to United Healthcare. This is our last one, at least for today. We'll see what happens on Wednesday when we scan with the class. This was on my bear watch last week, and I believe it was probably somewhere in these candles, right, on Monday. I liked it a little bit lower there, but it did jump up to this 500 mark, and look at the failure there. This could have been part of that bad print day. A few days ago, folks, we had a lot of weird pre-market movement, but it seemed to kind of take care of itself. However, all I care about is it's back below that 490 mark. I'll draw a better arrow there, or a line. It's below that 490, so I think this could bleed towards that 480, 475. So something diagonal, sideways to down, makes total sense on UNH. So overall, folks, just stay focused on the overall pattern. It's something I struggle with. I like teaching these classes because it's basically reflection of what I'm dealing with. So I imagine most traders are. Stay focused on the overall pattern. The day-to-day gap up retracements, this good news, bad news, announcements, they mess with you. They mess with me. But if you just go from day 1 to day 2 to day 3 and then draw a line across all 3 days, or Monday to Friday and draw a line on the Friday, it'll give you the trend. And so far, it's been +1 since the beginning of the year, and it hasn't changed. Right, so the Fed's next move versus the market expectations. So far, these markets have completely been against the Fed's expectations of an economic slowdown and worries about high inflationary numbers, things of that nature. The markets have gone nowhere but a beautiful about 45-degree angle since the beginning of the year. We'll see how long that goes. So sentiment, it's reactionary for now. Do not confuse that with fear. It's complacency. Earnings season continues. Check all of the potential trades. I didn't see anything that was worth mentioning as far as the big ones. That can change tomorrow, the next day. Keep an eye on it. There's plenty out there. All right, guys, thanks for joining me, and we'll talk to you next time.